Hello, everyone, and welcome to the Marine Money webinar series, where today we're going to be tackling the subject of being a CFO during the turbulent time of this global pandemic, COVID-19. I'm your host, John Chair, and it's my privilege to introduce the gentleman that will be taking us through this extremely relevant and interesting topic. Moderating and leading the discussion, we have Ted Horton, partner at Seward and Kissel, where he co-leads the Capital Markets Group. And then today we also, for our CFOs, we have Jeff Pribor, CFO of International Seaways, a publicly traded company and leading global tanker shipping company, and Alan Ginsberg, CFO of the privately held U.S. East Coast tug and barge operator, McAllister Towing and Transport. Before we jump into this thrilling topic, I wanted that kind of spans the day in life of CFO. I wanted to inform the crowd on some ground rules for this webinar. So for those who have heard this spiel before, feel free to tune me out for the next 15 seconds. But for those who are new to the game, here it is. You will be on mute during this webinar to ensure quality control of the audio. During this webinar, you have a control panel that should pop on your screen, similar to what I'm showing you right now. This is where you can engage or not in the webinar. Today, there are two primary actions that you can take. The first is to ask a question, which you can do in the lower box there shown. We love questions as it makes the session much more interactive, and these three are game to answer almost anything, I can assure you. And then to do this, all you need to do is simply enter your question in the text box at the bottom of the control panel where it says questions. I will receive them, and at the end of the webinar, I or Ted will ask the question on your behalf. The second major action is the ability to collapse that menu. So you see that, so you can see the speakers in all their glory. You can do this by clicking on the little orange box with the arrow in it on the top right hand, and that should collapse the control panel. So now that we've got this boring technical part out of the way, I'm going to hand this over to Ted, and he's going to take away this session.
All right. Well, John, thank you very much, and thanks to everyone at Marine Money for organizing this webinar this morning. I know that I speak for everyone in saying that we hope that everyone who is participating on this with us is healthy and safe at home, and we look forward to seeing everyone in person at a real Marine Money event at some time in the hopefully not too distant future. I know that for me and for everyone here on the panel today who's New York based, I think we're in the middle of I guess for me it's week 7 of working at home, and other people in different locations maybe a little bit longer, a little bit shorter than that. But I'm assuming that we've all been out of the office for longer than we probably ever have been in our careers for one stretch of a time. And so that working at home, I think, is sort of one of the big challenges that we're all facing. And I'll start on that topic. Jeff, I'll just start with you. I mean, from your perspective, what have you and other sort of members of senior management I'm sorry, John, my screen went something different. But John, what have you and other sort of senior management international series, what have you been doing to keep in touch with your employees, with your customers, investors and lenders, and what is the same and what is different as we're all sitting at home?
Yeah, thanks, Ted. It's I think the same for us. It's either week 6 or week 7. I'm not sure I can remember. That's one of the things about it. But we've had virtually all of our land-based employees in New York and Houston, as well as a few in Europe, all working from home, and it's worked remarkably well. I think the days are longer; they're spread out. I mean, I'm sort of working like 6 to 11, but I'm not working 18-hour days. I'm just spreading it out through the day. So it's a little bit different. But everyone's able to communicate. I can talk to my teams. Lois, our CEO, leads management meetings daily for senior management, usually in this forum, a video forum. And then we have a company-wide town hall meeting, generally once a week, where everyone can come in on video if they want, or just audio if they don't prefer the video. It's really up to the employee, asking questions they have.
Well, as I was saying, the technology is there. The human aspect is maybe a little bit different. I think Jeff maybe is coming back in. In the meantime, Alan, like McAllister side, slightly different issues. Company, but
I'm having a very different experience. I am really not enjoying it at all. I have a staff of 16 in the 5 boroughs, Jersey, Long Island, and Westchester. And that coupled with the fact that every day, because I've always taken an interest in operations, sales, insurance, I miss the ability to just literally go down the hall and see what's happening. And even though we're doing the same amount of interminable conference calls, I don't feel I have my fingers on the pulse of what's going on as much as we did, or I did. That said, it's working out. The technology, a good question, Ted, would be, what would this situation be like without all this Zooms and go-to meetings? How much more challenging would it be? So I'll acknowledge that the technology has made it a little easier not to be in an absolute panic about it. But I'm not having any fun, and I would agree with Jeff. I feel like I'm working as many hours, if not more. But I'm trying to keep some discipline. So I'll hit my office 8:30, and by 6 o'clock I try to turn the computer off and at least get outside once a day, which isn't easy living in New York City at sort of ground zero for all this. Jeff, are you back?
Jeff, can you hear us? Jeff, I think we may have the video, but not the audio. Well, and I think there may be still an audio issue. I would agree with that, Alan. The funny thing is, from my perspective, and I think everyone's different, if they have kids or schooling at home, it's a different situation. But a lot of people, the most productive hours are between sort of 8 o'clock and 2 a.m. for bedtime now, which is, I find, is frustrating as well. One of the things I was going to ask, and you're talking about sort of internal meetings and internal calls, and Jeff may have a different view as he would add his investors to this as a public company, but with external parties, with customers, with lenders in particular. I mean, are you in as regular contact with them as you were before this? Are they looking to do these conference calls and meetings with you, or are you speaking to them less frequently?
I don't think the absolute level of, we have a syndicated loan, so we have an agent, but I don't necessarily think the amount of time that we're spending on the phone with the banks is any different today. That said, it goes without saying that they're nervous. They're not nervous about us, but they are nervous in general. Remember, the bankers split into multiple groups. The pure commercial guys are obviously very worried about the fact that here we were only in Feb and March, and originations obviously look like they're going to be down for the year. So for the guys who, their stock and trade is doing deals or making loans, 2020 you could see as a difficult year. And then of course you've got the back office people who are equally nervous about their customers and their abilities to stay in compliance with all their loans. So for different types of bankers, the situation is playing differently.
All right, Ted, am I really back this time?
Voice and picture, we're back.
But can you in the audience hear me, Ted? So
I can hear you.
Great. Okay. Well, now we know some of the other challenges of working from home, trying to do this, right? Yeah. So we do some of our meetings strictly audio. Some of our meetings we use a video system, one or the other. We use them all, And sometimes things work smoothly, and sometimes they have a hiccup like we just had. So, you just roll with the punches and move on, right?
I was just saying as you were going off that the technology is there. It's just the human side that sometimes is difficult. So maybe that's not the case. Jeff, you were talking about, and Alan was talking about it when you were off. I mean, from internally and with employees and having the scheduled conferences is one thing. As far as, for example, with your lenders and with investors, where you obviously are not having the typical one-on-one interactions, are you finding that they are more willing or wanting to be in touch with you less? It's about the same. Have you been able to maintain the same contact, maybe starting with investors and then separately with lenders?
No, I'd say it's more, and what I was finishing on when I cut myself off somehow was that the once a week we have all of our employees on, a town hall. We also have a once a week social connection where those that want to can come on usually Friday afternoons. And last Friday we played a trivia game, just strictly voluntary, but people you see want to opt into that. And to your question, I think that the lenders, even if we're not borrowing now, we're not doing anything, you don't need anything from them. We're doing our best to stay in touch. And I think they like that. Just, hey, what's going on this week? Everything good? Well, nothing's changed. That's fine, but just communicate. It's always good to communicate in times like this that are different, whether it's good or bad, whatever it is. It's just communication is more important than ever. And then that's banks, I'd say, and investment banks, but investors. Well, of course, given the pandemic and its varied effects on different segments of shipping, we early on it hurt us, and lately it's been helping us. We can get into that, but investors are eager to communicate, whether it's by phone or by a lot of investment banks and research analysts have set up meetings, video meetings like this, either one-on-ones or group meetings. There's been a lot of creativity about communication, but there's a lot of investor interaction going on right now, more than usual, Ted.
More than usual. Well, you touched on one point, and maybe we move on. It's I guess a nice way to put it is in relative terms, it's maybe good to be a tanker owner and operator right now, and it's sort of a unique position. I just think, Jeff, from your perspective, it's an interesting time there. Maybe just for a second as to what is happening in the tanker space, and I guess, do you see this as something that's going to continue on for more than the next 4 or 5 months? And I'm talking about maybe the storage play, but maybe there's some other aspects that are leading into this tanker run at the moment as well.
Well, everybody that's on this webinar is certainly familiar with the vagaries of all parts of the shipping community, but it really is interesting to be in tankers this year. I mean, they're probably in our 4th different rate environment since the beginning of the year. We're only in our 4th month, but start out high, and then Corona hits Asia, brings it down to below 30,000 for a VLCC, and now we're 150 to 200,000 for a VLCC. So what is it? Clearly, the demand for our ultimate commodity that we transport, whether it's crude oil or refined products, is drastically reduced. And we're not naive about the fact that there is impact that would be hitting us, just like it's hitting dry bulk and container and God knows cruise and airlines, et cetera. But for some other factors that do make it good to be a tanker owner right now, because that low price leads to contango in the oil curve, leads to a lot of incentive for floating storage, which then also supports the near-term spot market. I mean, I think everyone's probably familiar with the math, but the contango today, and I'm talking even before and leaving aside the sort of technical crazy pricing that brought WTI under zero, but just the regular Brent pricing and WTI, except normally has been a good $10 a day for 6 months. $10 for 6 months of contango or more. But even $10 would support, close to $100,000 a day storage rate. So, traders can afford to pay, very high rates for tankers and still make a profit on the contango, and that's been extremely supportive of the market. We know it's not going to last forever. I can't give you a time frame, Ted, but we actually want the market to normalize. It's good for us in the long run for the surplus of oil to rationalize and part of one reason for that is way it'll rationalize is demand coming back. So we don't know the shape of that recovery, but when we are stopping the lockdowns, when we are renewing economic activity in Europe and US like is happening in Asia now, the oil demand will come back, and then the contango will eventually end. But in the meantime, it's a very good place for us to be right
now. And I mean, in the tanker space, and I obviously can't speak any specific plans that you're having, but maybe we can talk about sort of where some of the lenders are, maybe traditional lenders, and some of the sort of the less traditional lenders are, but specifically on the capital markets now, I think it's a little bit of a surprise to everyone where we've actually seen some activity there. On the cruise side, there was a Carnival bond deal that I think this magnitude was something that, at least from my perspective, was sort of surprising that got done. There have been some opportunities just on the straight equity side, actually not necessarily in the tanker space and on much smaller companies. And at prices that probably are not by any other standards would be a great time to do this. But the markets aren't dead, right? I mean, they're not dead. From your perspective, and at a time where we're hearing that sort of that liquidity issues and cash is the main concern, is to the extent that an opportunity does present itself, is this the right time to go out and to raise the capital markets equity at whatever cost you can do it? Which you're seeing some people do, or is it a time to be a little more conservative? And obviously, it's going to depend on everyone's particular balance sheet. But maybe Jeff, and then I'm curious on your view on that as well.
Yeah, thanks, Ed. I'll start and then defer to Alan. This also brings to mind that something we've been talking about at Marine Money forums for 25 years at least is being public or not. And is it better? This is one of the times when being public can be really helpful. Because it's all about liquidity right now. Now, fortunately, in our sector, with this kind of cash flow from the contango driven storage rates, we're in good shape in liquidity. We chose not to draw down any of our revolvers. Our banks are solid. Unlike the last turn down when you're worried about the banks, that's not the case here. The banks are in good shape. We're in good shape. No need to draw down. Just keep calm, carry on, right? But we're still running the playbook as if we were, say, in cruise, and we had to react to that because there is this pandemic going on. I look at Carnival, as an example, stock price down 70% plus, but able to raise liquidity, $6 billion. Obviously, they're a very big company, but because they had liquidity concerns, the capital markets were there for them. And I've seen it in smaller cases in shipping, for example. We had public companies access the equity markets. And I don't think you have to look any further than the fact that in the last 2 days, just the last 2 days, Monday and Tuesday of this week, $1.4 billion of volume in the tanker stocks. That's 15 times one day, so 7.5 times an average day of volume just in this week. So that tells markets equity or equity linked or debt or other capital available if you need it for liquidity, like a cruise line did, or for other purposes. So I'm comforted by the fact that things are pretty normal in that respect.
Alan, you've been on both.
I'm going to take a slightly different perspective. Volume equals trading, not long-term investing. Number one. Number two, I saw a picture of Herbjorn Hansen smiling. For him, Christmas came early, 10 months early. If you look at a stock chart of Nordic American or the tanker guys against any or all of the dry bulk companies, including my own personal favorite Eagle, but Genco, Star Bulk, Diana, Safe Bulk, you have to wonder, why am I still a listed company? Can't catch a break. Maybe it's time to privatize. As far as investment opportunities, if I had money today and conviction, a lot of money, I'd be lobbing in a bid to Oaktree or Apollo or Centerbridge, any of these guys owning dry bulk investments, and see what they have to say. Now they're probably going to say they're buyers, but at some point, even they will believe that there are better opportunities in other industries, and you might see a bid get hit. So for the tanker companies, hurrah, and enjoy it while it lasts. But for the container shipping guys, for the dry bulk guys, it is going to be tough sledding.
But Alan, take your view, I think, of where this is going. These are not normal times, I think is the view that you're saying. But you've had experience on both the public and now the private. If you were sitting on a public company side and you had the opportunity to do something in the capital markets, even at pricing that may not have been attractive even a month ago or 2 months ago, would you do it or not do it?
I would, if I could avoid raising debt or equity today, I would do it. As far as M&A, there's so precious little of it in normal times. The likelihood of seeing a deluge or even just a deal is pretty slim. So I to Jeff's point, be calm and carry on.
And that seems to be, we're talking about some deals, but that seems to be generally, at least from my perspective and looking at this from a legal side, a lot of the companies are, to the extent that they're able to, they're holding tight. If they've got a balance sheet that's going to get them through the next few months, that's sort of just what the goal is. But I guess, maybe you're touching on this, Alan, a little bit. Whether it's now, whether it's in a couple months, do you predict that there's going to be some opportunities, whether it's in M&A transactions or some sort of continuing consolidation as events like this do sort of result in a shakeout? Or is this just everyone's just going to
I hate to give you the stock answer, Ted. Social issues will continue to be paramount, and only when someone controlling the purse strings is not in management, maybe then you'll see some activity. But let's hear what Jeff has to say on it.
Well, look, I think that the entire global economy is being stretched in most areas, except for a few that are temporarily fortunate, like I guess Netflix and tankers, right? So, but it does provide a stress test for balance sheets. So, in our case, we have this gift of tankers. In our case, of cash now that'll be, I guess I'd call it a bonanza for now, but it'll be moderated in the future. So we recognize the bonanza, see the moderation coming. We get to plan for that on our balance sheets. I think this whole pandemic reaction that has put the brakes on so fast is a real stress test for balance sheets, and we'll have, in certain areas of energy in particular, there's companies that won't be able to make it through to the other side, and there will be a lot of restructurings and bankruptcies, et cetera. I hope the shipping companies, I think in general, the industry came into this with a stronger balance sheet than they did the last time. So I hope most companies will get through, but it's going to be a real test of how you operate your company. I wonder if people will think about it after this is all done. Hey, maybe I need to operate with a little less leverage. I think that's going to be one of the lessons learned from this.
Yeah, we were all, and I know we want to save a little bit of time for some questions, but we're just going sort of too generally into the outlook. I was thinking back, and it seems like a lifetime ago, but it was just a couple months ago, and we're all talking about sort of the initial impacts of this pandemic and for shipping and the general markets where it would be. And there's a general view is that, if it didn't go on too long, there was still a chance for sort of this rapid recovery or this strong end of the second year. I guess in shipping, but generally, and these are the open-end questions that you guys may not want to take a position on too strongly, but are we beyond the point of sort of having a viable recovery here, or has this gone on so long now that you think that there's going to be a prolonged event for shipping and just for the economy generally? Alan,
I'm an optimist, Ted. I mean, I think that you know, I do feel for all the parts of the economy, not to shipping and all. You know, my two of my kids have been furloughed, right? So you know, everybody's making such a contribution to taking care of society. It's really hurting us a lot. But I don't see any reason why we can't come out of it strong. I'm not predicting a V or not V. That's just for economists to say. I think that there's no letter for what's going to happen in tanker shipping. You know, it's up, down, up. I mean, it's kind of a little hard to say. But I feel like that while there might be a new normal, there's still going to be a place for what we do. You know, it is a fossil fuel, but as we move towards a cleaner, more sustainable environment, there's still a role for what we do. And I don't think we're going to see permanent 10 million barrels in of demand, for example. I think we'll be back, you know, close to where we were before, you know, by the end of this year. So that's where we are.
I agree with Jeff that shipping will continue to remain an essential service. But on a personal note, I have lightened up on equities.
you've
Lightened up on stocks.
widened up on stock. And I'm sorry, I'm looking at my own technological issue here. I'm trying to see if we have any questions that John passed through. John, I apologize. Where you were trying to send these to me, I cannot open right now. Are there any questions that we did want to open up from participants? And if they are you able to walk through those?
Yeah, no, I can take you through that. So one question that came in is, what's the general cost of oil storage right now per barrel per month? Are you seeing storage costs ballooning?
I gave you there's a number of different calculators to take you through it, but I think the simplest way to look at it is what I mentioned before is just go pick it up off of any service you want. You can look what's June WTI or June Brent, and then get a December number, and you're going to see like $13 a barrel difference in the two. And just the simplest way to think about it is, you know, if you buy 2 million barrels, put it on a VLCC and sell it forward 6 months, you know, if at $10, that's $20 million of profit. You have to subtract a little bit for financing of that and a little bit for insurance. But then your major cost is what you have to pay a tanker company like us. And so you see that, you know, the 6 months, you know, contango supports, you know, approximately $100,000 storage rate. So that's what it tends to cost is where the market will clear. So that's kind of the simplest way to look at it. If you go out a year, there's a little more contango, you know, like maybe it's $3 or $4 more, but you're dividing by 365 days. So the year storage cost, it would be less. And that's why you don't see as many 1-year charters being entered into by oil companies or traders who are doing storage. It's heavily on 6 to 9 months these days, this last few weeks.
Okay, great. And so then we have one other question, and maybe we can slip in another one, but shipping has been characterized as an essential service. In your opinions, have crews, whether on tugs or extended rotations at sea, been given enough support and credit? Have flag states been helpful, etc.?
Alan, you want to start?
I'll start. Sure. Thank you for a softball. Crew safety is the absolute utmost importance. We have had to change the way that we supply the ships, and in the language of the Jones Act, grub the ships. So in the old days, the crew would enjoy going to the supermarket and buying their groceries. Today, the service brings the groceries to the dock, puts them on the dock, and leaves. So we've gone out of our way, both on the boats and in the offices where the dispatches are, to make sure that they don't have interaction with anyone that could potentially infect them. So without the crews, our business stops. So it is taken very seriously these days, yes.
And I would just add from the international side to part of that question, John, if my head of operations, Bill Nugent, were here, you want me to say that I think that the port states and other, the technical managers, a lot of different people have been pushing hard on easing the restrictions on crew movements. That's a big thing right now, is that some of these crews are now getting to the point where they're beyond their normal time and they want to get home, and the next crew wants to rotate in there and get on the ship. So with travel restrictions makes that hard, but there's a lot of people that are pushing for relaxation there, and I'm encouraged that with the reopening of the East, first China and Asia, hopefully we'll be able to get a lot more crews moving very soon.
That's great. And I think we have one last kind of question. I know we're at time, but it's more of an open-ended question of like, how do you believe ESG will be impacted by this situation? And I'll hand it over to you, Jeff. Do you want to kick this one off?
Yeah, well, Lois and I get asked this a lot. There's a tendency to think, oh, well, we have a contraction here, a crisis, and a demand reduction, and maybe ours is spread out and we're more fortunate. But given this overall economic effect, aren't we going to put sort of all hands on deck, excuse the pun, for recovery and forget about secondary goals like ESG? And our answer is absolutely not. I really don't think. I know that's not our intention. I don't think that's the way the world's headed. I think this pandemic and the reaction to it is, it's not like any other. It's caused by, the economic reaction is caused by a pandemic, which is a human quality of life situation. We're taking these measures because we're trying to take care of the vulnerable in our society. Is there anything more quality of life oriented than that? And so when you think about the new normal and how we're going to behave afterwards, I think it's natural that we'll just accelerate a tendency or trend that was already there, which is not just to focus on the bottom line, but quality of life goals like ESG, the environment, the safety and welfare of our seafarers and other employees. So I think it's going to actually accelerate the emphasis on ESG, not push it to the side. And I hope so.
Alan?
No comment from me on it.
And what about you, Ted? What do you think?
Always the optimist, Alan. I agree. I try to take an optimistic approach. I think I agree with Jeff. I think that the world will go on, and I think what's interesting is, and I'm sure everyone's seeing, is something is going to change. I just read this morning is that at least outside of the New York City area, other parts of New York State are starting to set timelines for reopening, and I think it's going to be interesting as what reopening means and what we're all living under in the next 6 months. But life will go on, and this will reopen, and this makes people think about things differently, but they don't forget about the other things. So I'm optimistic. Like Alan, I'm very ready to get back into the office. I think there's a lot of issues on this staying at home, some tangible, some not tangible, and I'm sure that most people share that view. But we will all be seeing each other in person again.
Fantastic. All right, so that's all that we have time for. I want to thank you, Ted, Jeff, and Alan, for having a thoroughly thoughtful conversation. I want to apologize to the audience for any technical issues that we experienced today. I was going to make a joke saying that, I think we're beyond that, but I think we will always be challenged with a couple of those. But this webinar will be posted on our site later today or tomorrow, so keep an eye out for that there. And we'll keep you updated on next week's webinar, which is looking to be very exciting. But for now, this is John Chair from Marine Money signing out and wishing you good luck and health during these times. Thank you all.
Thank you all. Thank you, John. Bye.
Thanks.